back to BLOCKTV. Well, crypto Twitter serves as a never-ending stream of information, thoughts, and discussions about the world of cryptocurrency. It's a mammoth task keeping track of all of it, but fortunately for us, we're joined every week by Nathaniel Whittemore, who lives and breathes the ecosystem, and every week combines all the best of the best into his long-read Sunday column, has now left Twitter and found a new home at Substack. All right, Nathaniel, firstly, thanks so much for being with us.
Yeah, thanks for having me. Although no thanks for bringing up that I had to leave Twitter, which is very, very sad, but I think necessary.
I think a necessary move, and one I'm sure will bring a glorious future to all. I see it as nothing but a positive. Nice formatting. It's so much more comfortable, easy on the eyes. So in saying that, let's kick us off this week with your theme, which you've aptly named Prices and Power. Nathaniel, what do you make of this, and what are you trying to get at here?
Sure. So, I mean, this week was actually, I think the way that I summed it up at the beginning was this week was same with the twist. And we'll see the twist at the end. But it's a lot of the things that we've been talking about in an ongoing way. And of course, you know, these markets, as much as we like to talk about the future and everything, are driven by short-term prices too, at least our conversations. And so there was an interesting moment last week where we had gotten pretty comfortable with this 10,000 number, and we had, you know, gone down and then hit it again a few times. But then in something like 5 minutes, we went down like 6% or something crazy, right? And it was on Wednesday, and it was just this drop, and we've stayed very consistent, with the exception of maybe a little bit of a rise yesterday that then kind of recalibrated. But the thing that was fascinating was watching people's analysis of why that happened. And I think, to the community's credit, it didn't really have a short-term freak out particularly. Now, maybe it would have had that price continued falling, but more or less people were just interested in theorizing about why. And the most common answer that I saw had to do with the fact that on that same day, both Binance and Coinbase had gone offline for unexpected maintenance, right? And you know, we've been living in the context of these DeFi attacks, which we'll talk about later, and so people's minds, I think, were kind of primed to think adversarially, and it turned out not to be anything like that, but it showed, I think, just how much these exchanges dominate the industry and really shape how we interact with the industry, and what small or seemingly small things in the normal functioning of those exchanges can do to the markets.
Yeah, certainly a powerful play there in terms of the centralization of a supposedly, decentralized world of cryptocurrencies, or depending on who you ask whether that's true or not. But do you see this sort of focus movement shift as part of any notion towards a shift in the way the power dynamics work within the market, or at least an awakening? And I know we will touch on this more later on, as you said, with DeFi, but perhaps a taste, an awakening of some to whether or not the decentralized nature of much of cryptocurrencies really is what people hope it is.
I think that it's important, as the market matures, inevitably there's going to be an ongoing tension between decentralized underpinnings and centralized institutions that exist on top, right? And there's going to be these extremely powerful centralized institutions that just perform better and outperform. And I think Binance is perhaps the best example of that we have now. You know, the mindset shift in even thinking about decentralized alternatives to centralized institutions is a big one. And I think that moments like this are reminders for people to at least evaluate themselves how comfortable they are with the power of these exchanges. And I think that there's a couple things to note. One is obviously that there are these other forces in terms of decentralized exchanges and what they might mean. Although even in the context of decentralized exchanges, you're still going to have centralized interfaces on top of them. That's why Binance continues to be interested in DEXs. But you do also have another phenomenon, which is that the market still believes that the future of who the exchange leaders will be is open, right? Last week we heard reports from the block that FTX was out raising at $1 billion valuation, basically 9 months after launching. And I think there's a lot to read into that in terms of the growth of derivatives as an important part of this market. But I think it is a reminder that as huge as maybe some of these exchanges feel today, in the 10-year, 11-year history of this industry, there's been every couple years a recalibration of the leading centralized institutions. So, one perhaps comforting thing is that even the most powerful institutions are not particularly invulnerable.
Yeah, certainly, everyone has a petard they could potentially be hoist on. Anyway, let's turn now to the next theme for the week, one that's keeping everyone's attention as the days, weeks, and months go past. That, of course, being the halvening, depending on how you want to call it. And the most important question of all, Nathaniel, has it in fact been priced in?
Yeah, so it turns out still no consensus on that.
Oh,
In
what? I
fact, this
thought we were
week,
going to have an answer.
I know. No, just more good evidence. I mean, so okay, so here's the positive things. One is I actually think that the debate is kind of positive in a weird way because it's it is creating this externality or unexpected externality of people going and examining economic theory like efficient markets hypothesis, which is a net benefit, right? The more that people in this market understand competing economic theories and can kind of give their takes and apply, I think that that's actually valuable. But the contribution to the conversation this week that I saw that was most interesting to me was actually it came from Plan B, who famously is best known for the stock to flow model. And he was talking about the upcoming or the likely upcoming areas of FUD around the halving. And he basically made the point that each halving there is kind of a new cycle of FUD that emerges. And so he talked about the potential for new anti-Bitcoin laws that Treasury Secretary Mnuchin seemed to be intimating at over the last couple of weeks. He talked about hacks, as we were just discussing. He talked about forks and basically other FUD potential narratives. And I do think that that's an interesting lens through which to look at the upcoming halving to see what do we really think are the threat vectors right now to the Bitcoin ecosystem and to the crypto ecosystem more broadly.
Mm-hmm. And I mean, those threat vectors that we're seeing, are any that sort of stand out to you as critically important?
Yeah, I think that the first one that he identified, the potential for a stronger regulatory push, is the one that's the scariest to me. I think we've seen Iran get more and more aggressive in its we're gonna not deal with your sanctions kind of posture, and to the extent that Iran becomes associated with the Bitcoin narrative, it's like Bitcoin being used by online drug dealers is one thing. Bitcoin being used by enemies of the state is a whole different level. And to the extent that there are powerful people who take it as in their interest to try to go after Bitcoin, I think that's the most worrisome potential area of quote unquote FUD to me, because it's way beyond FUD. It's an actual attack. So that's what I'm watching, I guess, most closely.
There's certainly bigger narratives at play here starting to span out as cryptocurrencies, digital assets as a whole spread their way into the global economy, which segues us neatly into your next theme for the week, that of central bank digital currency developments, which no doubt, whether people call 2019 the lost year or the year of the hump, whatever they want to call it, there was one factor that came out for sure, and that was that Libra came along and changed the whole narrative around this idea of a central bank digital currency. Nathaniel, what are your focuses for this key theme?
Yeah, so I mean, to your point, this is just the inescapable kind of background noise, and the context by which governments are re-engaging in this whole space is through the lens of digital currencies. And so last week we saw a couple things. First, Libra actually announced a new partner, right? It's been months it's been months since we've heard anything. And in the months before that, it was just, the big legacy financial players leaving the Libra Association. Well, Shopify announced that it would be bringing its 1 million plus stores to the Libra Association. And this is obviously a good bit of PR news for Facebook. I don't think it changes much in terms of the real challenges that they face, which are regulatory and not really based, I don't believe, on the strength of the Libra Association. But it is a good PR win. And I think to me, it's partners like Shopify, frankly, make a lot more sense than partners like Visa and MasterCard in some ways. Visa and MasterCard, you have to believe we're just doing this in a keep my friends close and my enemies closer kind of way, right? That if this is going to be a thing that they needed to deal with, they wanted to be in on it from the beginning. Whereas a company like Shopify is literally trying to recreate the way that commerce happens. And it just makes much more sense as an ally. So there was that. The Libra project itself had news, but then we also saw more developments from governments around the world. In particular, Sweden launched a test phase for an an e-krona project. And I thought the interesting thing about that is they, in their announcement, they explicitly called out the threat of competition from private monies as the reason. So it's very clear that we can hem and haw and say Libra's dead on arrival all we want on Twitter, but governments are not treating it as dead on arrival. They're treating it as a very serious threat, frankly.
They all seem to be taking it very seriously and continuously talking about it in ways that have spawned well beyond Libra and well beyond Libra's sort of origins as it stands, as sort of a global power, to be sure, and one certainly for us to watch. But in terms of things to watch, there's sort of the longer term trends, but also the more immediate fears that threaten the global economy, world, whatever it may be at the moment. So moving on to the next theme of the week that you've titled Macro and Corona, of course, discussing that all-important, all-consuming theme at the moment of the coronavirus and its potential impacts. Nathaniel, what have you got for us?
Yeah, it's been fascinating to watch the crypto and the Bitcoin community in particular's response to the coronavirus. And I was even just asking this morning on Twitter, I've got a poll going right now about why this community seems to be so invested in this story, right? Does it have to do with us being kind of macro hedgers who are more apt to try to hedge against things? Does it have to do with our base level disbelief in government narratives? Does it have to do with us being chicken littles just running around saying the sky is falling? Or is it something else? And I think that I don't know the answer, although there's a lot of people saying it's some combination of chicken little and all of the above in the poll so far. But what I think though, and what I was profiling in Long Read Sunday is there's a sense among people who are watching what they believe is an unsustainable global economy, right? Where asset prices and markets are completely divorced from underlying economic fundamentals, and saying at some point there has to be a shock to the system that actually forces its non-reality into being, right, into clear and present view. And so far the coronavirus hasn't done that, right? You're seeing hundreds of millions of people quarantined in China, and yet markets still achieving all-time highs. Now, this week starts in a slightly different place and who knows, as the virus starts to metastasize and actually be brought to bear in Europe and in places that are a little bit quote unquote closer to home, maybe that will change. But it's a fascinating question. And so a lot of what we were exploring this week is basically just threads and conversations with people who are looking to this macro environment and saying, is this the straw that breaks the camel's back, basically?
And a critical question to ask in this whole environment, and this growth that sort of extrapolates out on and on and on. It was an interesting one there. I saw Hans Hodel was talking about Hans the Red was talking about this in his thread that you were linked to back in your themes, in your long read Sundays. And it was an interesting point that he made that, despite the fact that housing prices have cost more than ever, that, the wages have only grown at such a small amount as the sort of reins of the global economy are handed from the boomers over to Gen X and to the millennials, does the sort of reality of the current macro picture sort of hold true? I mean, do you think that it does, Nathaniel? Do we still live in the global economy that people pretend that we do, or is this all a sort of false narrative?
I think the scariest thing that is the scariest and most undeniable question, I think, in some ways, is when boomers have to take money out of markets because they need to live on it, right? Because they are past retirement age. Who are they going to sell to? I'm 35. I live in the Hudson Valley, in part to be away from the prices in cities, but we're looking at home purchasing as something that we just don't want to take a bath on, rather than as something that's actually going to build wealth, because the prices are so high. When people start to sell homes, the question is going to be who's going to want to buy them, right? And I do think that the thing that scares me most is the retirement transition at these asset prices, right? People who have made financial plans on the basis of both A, what the value of their assets is today, but B, assuming a continued appreciation of those assets, who ultimately will need to sell some of those assets and going to find that there's just no buyers. So that's the thing that scares me most. And it scares me most as someone who has two parents who are retired, who have made a similar plan. So I think that's, even for people who aren't prophets of doom and who aren't, chicken littles, it's very hard to look at all-time highs in asset prices and a very large generation that's going to need to sell at least some part of them and figure out how that aligns.
Certainly important questions to be asked about how the next decade or two do play out. But speaking about something a little closer to home, but one with some sort of went under the radars but has some potentially profound effects, turning to your last theme of the week, which you've titled Adversarial Thinking Comes to DeFi, but which I'd take an even more intense sort of stance and ask you, Nathaniel, are we potentially looking in the wake of the BZX hack or exploit, whatever we want to call it, at the death of DeFi, at least perhaps as we know it?
Well, I would say that right now. Okay, so here there's two perspectives. One is this is exposing the fundamental problems with DeFi in ways that will be unrecoverable, right? But the people who tend to believe that don't have much hope for DeFi anyways, right? They just fundamentally believe that the premise is flawed. And they think that this is just an industry making the same mistakes of traditional finance, but in new, easier to exploit ways. The second position is that this type of attack now and the resulting adversarial thinking is actually net healthy to the long-term probability that DeFi actually resolves into something meaningful. And so the thesis there is that these attacks ultimately didn't have particularly huge implications from a financial perspective, right? They didn't involve tons and tons of people getting hurt or anything like that. We're dealing right now with a group of enfranchised early adopters who are pretty aware of the risks that they personally face if sometimes they are being perhaps a little callous with the risks on a systemic level, right? And this is why I've talked a lot in the past about why I don't think that marketing DeFi to mainstream investors is the right idea right now. I think we've got this perfect little incubation spot where these exciting possibilities can be pressure tested with live ammunition without the potential of too many casualties. So that's the real question. I think there's a natural thing that happens as these technologies shift to financial movements, right? When people stopped thinking about Bitcoin as a technology innovation and started thinking about it as an important differentiated monetary instrument in the world that we have, they started to become more conservative about how much they wanted to change or tweak the technology knobs. And I would be shocked if we didn't see things that are similar with DeFi, where particularly the MakerDAO ecosystem becomes more conservative and less likely to race into new technology features. And that doesn't mean that innovation stops, but I think that once things start to work, you have a higher interest in preserving what's actually working and allowing the value and the functions that it is providing to thrive rather than putting them at risk by doing new things. So I wouldn't be surprised if we start to see a little bit of a shift, and this is going to be uncomfortable narrative space where you have the more established projects in DeFi becoming at least a little bit more conservative and more protective of what they've built rather than just constantly racing to the next cool thing. But that could be wrong.
Certainly, as I say, stop giving the benefit of the doubt. Maybe a time for a bit of consolidation, a little focus, making sure developers are being a little more careful now. There's over $1 billion locked up in DeFi. An important time to stop and reflect. Speaking of which, Nathaniel Whittemore, I want to thank you so much for giving us the time to stop and reflect on some of the biggest stories of the last week and beyond. And for those that are watching at home, stay with us at blocktv.com for all the latest in news and information. I'm Asher Westrop Evans. Thanks for watching.
For more news and updates, follow us on Twitter.